Hello, how are you? Hopefully, you have a wonderful day. And today I'm going to cover the Microsoft stock. The ticker name is MSFT. And those who are new to my channel, is I basically perform the fundamental review of these stocks, go very deep down to see from the long-term investment perspective and put my opinion on the stocks, whether it's good for the long-term perspective or not. So myself, I'm a Pramod Kumar. I'm a CFA charter holder and FRM certified, and this is my website. Okay, and on my website you find multiple stocks there. Okay, so let's get started. I think so. That's the so on the Microsoft stock. So basically, this is the stocks which has the large cap and has a long history. Okay, so let me show you what I meant. Okay, so I'm on the Yahoo Finance website, and just see the latest number on today's date, which is right. You can see the stock price today. It's 194.24 cents US dollars, and the market is closed at the moment. But this company is 1.473 trillion dollar company. If you have that much money, you can go and buy the company. And this earning per share, look at the earning per share of this company, $6 earning per share. PE is for sure is quite expensive, and I'll show you the historical PE and all. But if you see the 52 weeks range or the days range, the stock is pretty much trading at the highest. So let me also show you what I meant. So if this is 5 year, but if you notice, this is pretty much at the highest level right now, right? At the price. But in earlier recession, in April, it was, or sorry, in March 18th or 23, it got a dipped at 148, and since then it's got recovered and even goes higher from its previous history. So that's pretty much on the price. So if you imagine that how much, if you bought this stock on 2015, which is somewhere around here, I'll show it to you, is here, it's $41. If you bought the stock at just 5 years ago, you have made 3 times of your investment. But don't worry, even if you have bought this stock honestly at 2019, you already have double your income, because it was 94 or 98 and it's 194 right now, a little bit over double of your income, right? So that's from the very, very high level. But do you think from the fundamental perspective, is this stock is really worth it? Because this is very long history of its running. Do you think whether the stock can able to continue to run its momentum? So that's what I like to see by seeing its fundamentals, right? And then we'll try to make our opinion out of it. Okay, so let's me go back to the PowerPoint. Okay, so pretty much we'll see the return on equity or assets or investment capital for 5 years, the revenue growth, and so on, right? As you know, my pattern. Okay, so let's get started. So on the high level, if we see, this is the percentage on the y-axis, and the x-axis we have 5 years of the data. So this is from the 10K, and I will, after this, on the because this doesn't have any noise of the coronavirus, right? So that's what the data I want to see. And I'll also see, once we good with this, then we'll also see on the latest 10Q data as well, which shows the quarterly effects from the coronavirus, and how we can, and we'll see that as well. Okay, so but let's see here. You see right now the return on equity is huge, is on 2 digits, and it's keep increasing, right? Here in 2018, I noticed most of the company on the tax side and all, they have to make some huge tax payments, so that's why it's a dip here. But otherwise, you see it's recovered in the next. It's 42% return on, so that's immensely huge. And the return on investment capital is pretty significant as well. It's 24%, and it's near close to 20 in the past 5 years, if you just ignore the 2018. Similarly, on the returns, the assets, whatever they have, pretty much it's doing good. Right. On the return on equity side, yes, as you can see, the latest V is a little bit high in terms of the price over the earnings, but in the past I see in 2018 it was way higher, but it's usually around 27, 28, right? That may okay, because earning get affected by the coronavirus and all. But overall, that's just the past. We are more interested in the future, right? And the high level margin, so the seems like 60-70% margin on the gross profit side, which is closing to consistently. If you see, they maintain this margin, right? This is magnificently amazing, right? This is amazing. And the operation margin is also increasing. You see 36, and it's keep increasing, and now it's almost 44%, and it's also reflecting in their bottom line, and bottom line is also touching close to the operating margin, is 31%, which is even I like further better, right? This dip I noticed that this is because of their heavy tax paid in this year, so that's why it's down here. But otherwise, all three, the margins looks good. I also checked on the liquidity side, just to cut short here, and I can show you the cash statements on the quarterly, the latest. They have enough liquidity, so I didn't see any problem in terms of liquidity and all. And if I compare with their revenue with their net income, the netting looks pretty good as well, right? So this is in terms of billion, 125 billion dollars in revenue, and close to $40 billion in terms of net income, which is very good. So I'm going okay, and this is one of my favorite chart, where it's compared the net income with the cash flow. So this means the company is doing the really very good job in terms of getting the money from the core operations, rather than issuing from the finance or issuing shares, which we have seen in our Netflix site, right, where the company have the net have a large revenue, but the cash from operation is pretty much negative there, right? So that's the red flag for me. And if you haven't watched that video, you can search my YouTube channel. In that one, you will find a couple of those very deep fundamental on Netflix, Nike, and so on, right? I have performed that. Okay, now let's go to the deep into the financial statement, and okay, so I'm hiding myself just to ensure you'll see the full picture here. So this is from their 10Q, where what it's trying to compare from 2020 to 2019, the first 3 months, and the previous and the last 3 months, right? So here, these are in millions. So this is in $15 billion. So this is the first 3 months in here. You see, I'm amazed that the net income is actually increased as compared to the last 3 months, and also the previous last 9 months is increased. So it doesn't much affected by much of the coronavirus, right? And the cost of the revenue is pretty much increasing as the revenue increase, but not that much. So as you can see, all this get reflected into the gross margin, right? This is a 24 billion for first 3 months, and as compared to 2019, it's $20 billion. And if I compare with 2019 to 2020, we can see sharp jump in terms of the gross profit margin, which I have also highlighted that it consistent with their past pattern as well, right? So the margin is quite increasing. So that's pretty good thing. And one more thing I like to maybe is a good point to mention now here as well. The Microsoft is not only just anymore like operating kind of a systems, right? Or they are as we have, they are in the gaming, they are in the cloud business, They are doing the software as a service. LinkedIn is their very good product, which most of the people uses. They are into the enterprise services, so they are in very diverse in terms of their revenue and the business. So most of, as you can see, I wish they have more diversification, that how much revenue is coming from each, but pretty much is from their service side and from the product wise, it's half and half split, and they have a good and it shows in their financial statement, right? As you can see on the net income wise, it's quite good as well, right? And the earning per share is increasing. So I also want to highlight one thing to you on the cash flow statement, right? Yeah, here. As you can see, the same thing on the cash flow statement. You see here, as compared to the first 3 months of 2020 to the 19, the cash increases, right? So I like those kind of a business who able to generate very good in terms of the cash. So that as well. Okay, now the another point which I like to see, most of this company, basically technology company, they invest in debt. So what I'll show you their debt, right? How much their debt they have to pay in the near future. Okay, so now you can see in this one, so the company issued in 2009, right, some debt of $3.8 billion, and then 2010 the company issued $4.8 billion and so on, right? And the maturity, good thing about to know here is the maturity of these is not due anytime soon. The maturity of these calendar years 2039, 40 and all, right? They have to pay fully. But overall the current the long right, so that's one thing I like it. So it's not that, and the interest rate on the debt is not that high as well. It's pretty low, right? The next thing which I also want to share with you is their share repurchase, which is, I think, is 61. Yeah, so the company did so this is their share repurchase. They did a $40 billion of the share repurchase. So as you know, if the company is doing very well, then only the company does the share repurchase, right? Otherwise, why company go and buy their share? So they have a lot of cash, it shows, and this is the one way of the company to give to their shareholder back, right? So as you can see, in September 2016, the board of director approved a share repurchase program of $40 billion in the share repurchase, right? And this share purchase program commences and was completed, and they just completed this program in February 2020, and no problem. And also don't get disappointed then that this program is over, because as you can see, in September 18, 2019, our board of director approves a share repurchase program up to $40 billion. So this means the company has $40 billion they have declared again, which, right? So that's pretty good, right? So this means even if nothing will happen, then for sure the price will go up, because the company is buying their own shares. So that's why I bought. Honestly, I'm long on this company. One thing is this is a good dividend paying company. This is a very diverse company in terms of the services and products. I'm a heavy user of Microsoft. I don't think so. Even if the Mac user, they must have used Excel and other stuff, right? So the cloud business, the research development, what they're making. And I also have noticed, and one more thing I like to share with you, I find this article on the cloudwars.ca, and here in terms of the revenue, the Microsoft is number one. As you see, the Q1 2020, 13.3 billion is coming from their cloud services, right? Whereas Amazon cloud is only bringing $10.2 billion, right? in from the cloud. And then next is, right, so that's what this is showing. But anyway, whether it's 1 or 2 doesn't matter, right? So the matter is the company has many different channels. So company is, the main thing is, I think, is the company is a dividend paying company. It has a very long history, is a large market cap, plus it's very innovative. It's spending in research and development, and I believe it's taking a right bet. For example, the cloud business, this the services. Now we can go to the Excel or Microsoft Online 360 is there. So subscription based services, the model, right? So these kind of the things, I think it's very innovative ideas, and I don't think so anytime soon we can live without of this Microsoft kind of services. And so for that reason, I'm pretty long on this. So I have already bought the shares, but that's my perspective. And I think the Satya, who is the CEO, he's doing a good job as well, right? So, and he's come from the tech background as well, so that's a bonus as well. So let me know what you think, and if you like this video, kindly subscribe and like this video. And hopefully if you want me to cover any other stock, put in the comments, and I'll do that for you. Okay, so thank you for watching this. See you in the next video. Bye for now.